Cerberus Capital Management is facing a major crisis of confidence. Investors are pulling billions of dollars out of the firm's hedge funds. Let's go now to Monica Bertrand for that story. Monica?
Scarlett, this is another blow to Cerberus and its boss, Steven Feinberg. The Wall Street Journal reports the investors have decided to liquidate more than $4 billion of the nearly $8 billion in Cerberus's core hedge funds. Now, according to the paper, investors had the choice of liquidating now for an uncertain payout or stay with Cerberus and take a chance on a new fund. Most investors chose to cash out rather than trusting Cerberus to make new investments and collect its traditional fees. Now, the paper says that the firm is trying to persuade some clients to change their minds about withdrawing funds and says the amount being liquidated could change. This is clearly a blow to Cerberus, as we mentioned, which was considered one of the most successful private equity and hedge fund firms. More recently, though, the firm has attracted attention for failed investments in Chrysler and GMAC. Now, for clients who keep assets in new Cerberus funds, the concern is that they'll own similar assets to the liquidating funds, so a sell-off in one fund could considerably reduce the value of other funds. Now, last year, Cerberus had its first negative return in its 17-year history. Its $2 billion fund, Cerberus Partners, lost about 24.5%. A bigger offshore fund has a similar performance. The Journal says that Feinberg wrote to investors in July saying that he feels an obligation to you to turn this around. Scarlett, back to you.
Thanks very much, Monica.